Please keep in mind that this is not a financial advice video. Please do your own research while investing into the stock market. This video is only for entertainment purposes. Hi everyone, my name is Amrinder Singh Bedi, and in today's video I will be talking about why and how I invest in stocks. The reason I am making this video is because only 1.5 to 2% of the population of India invests in stocks, whereas in developed countries as much as 40% of the population invest their money into stock market. The reason behind this is because the image of stock market is really bad in India. It is considered as gambling, which is totally wrong. The reason why stock market has such a bad image in Indian market is because there was no establishment to regulate the stock market. So after SEBI was introduced, it got quite secured. But before that, a lot of frauds were happening, especially in the exchange of shares, which were in physical form as compared to digital form today. Now we have plenty of apps like HDFC Securities and Zerodha, which provide hassle-free buying and selling of shares from our smartphones. Also in the past, you couldn't buy stocks in fraction. Usually you had to buy at least 100 units, which made it an expensive thing to get into. Also many scams happened in the 90s, and one of the scam which everyone in India is aware of is the Harshad Mehta scam. So with this video, I want to change people's perception that why you should start investing in stocks as soon as possible with whatever spare money you have. So sit back, relax and enjoy this video. So the number one reason why I invest in stocks is because it is the key to financial independence. As we all know, money sitting in saving accounts and FDs are not providing enough interest rates in comparison to inflation. The value of money is depreciating each year if not invested in high rate of interest returns. FDs, for example, provide 8% interest rate and the inflation is at 6%. 8% interest is taxed as well. So you are basically not earning a single penny in FDs considering inflation. So you must be wondering, what is inflation? Let me give you an example what inflation is. Suppose you buy 1 kg of apple for 100 rupees. After a year, the same 1 kg of apple will cost you 106 rupees. So, the purchasing power of 100 rupees has declined. This is inflation. Basically, things are getting expensive every year. So that is because of inflation. So my number two reason why I invest in stocks is because it is highly secure. With digitalization of shares are stored in our Demat account, which are very safe. Before, it was very difficult to store physical shares and there were chances of it getting torn, wet, or some kind of wear and tear of the paper. But now since it is digital, it is highly secure. Demat accounts are as safe as a bank account, but don't go to the advisors who are guaranteeing a fixed return in stock market. It is a very volatile market. So if someone guarantees a fixed return, consider them as a fraud. And I would suggest to do your own research before investing into a particular stock. And if you don't have time to research, always invest in ETFs of Sensex and Nifty. Sensex is a combination of 30 successful companies listed on stock exchange. So when you invest your money into an ETF of Sensex, your money is getting divided into 30 companies, which makes it a safer investment. We all have heard not to put all our eggs in one basket. So ETFs of Sensex and Nifty are the perfect way to achieve that. Similarly, Nifty is a combination of 50 largest companies where if you invest in it, your money is divided at an unequal proportions into 50 companies, which is really safe. Number third reason why I invest in stocks is the liquidity of stocks. Stocks are highly liquid. You can buy a fraction of stocks depending on your budget. Let's say some stock is worth 10,000 rupees and you have only 5,000 in your budget. You can buy half of that one particular 10,000 rupee stock. Once you have sold the stock, the money will be in your account after 2 days of selling it, which makes it highly liquid. Compared to other investment options like buying houses, one can withdraw money from stocks in short period of time, which can be used in an emergency. Selling a house, for example, is a long and tedious process, and you cannot access the money for some months of finalizing the deal because a lot of documentation goes into buying and selling a house. So I love the fact that I can sell the stock on one day and access that money on the third trading day. Number fourth reason why I invest in stocks is the ease of trading stocks in today's time. With apps like HDFC Securities, Zerodha, Upstocks, you can really easily open a Demat account and a trading account and start investing with as little as 100 rupees. All these apps have very friendly UI and many of them have no commission on trading. So you can basically buy and sell stocks using your smartphone through trading apps while sitting in your couch, which is really convenient. So now I will talk about some things you should follow while investing in stock market. So the number one thing which is really important is long-term investing. If you look at the graph of Sensex or Nifty in the last 20 years, it has gone up only. So in long term, investments of stock is considered very safe and guaranteed returns are ensured. Long-term investments take away the risk of losing money, and losses are only realized if you buy a share at high price and sell it at a lower price. So avoid this, and in order to avoid this, only invest the money into stocks which you don't need for the next 5 to 10 years. I personally invest only spare money which I don't need for at least 5 years into stock market. One should totally avoid day trading as it is highly risky and chances of losing money are significant. Focus on outperforming the market by 5 to 10% rather than expecting unrealistic percentage of profit. If the market is up by 10%, focus on getting 15 to 20% profit either through your own research or with the help of advisors. So the second thing which you should keep in mind while investing in stock market is to diversify your portfolio. Like I said, one should never put all their eggs into one basket. Diversification is really important while investing in stock market. There are huge number of stocks you can invest into which will lower your risk of putting all your money into one section. This is important as if one investment goes down, you have other stocks which will be performing good. So diversification of investments and diversification of investments in stocks is the key to grow your money. Some other investment options are real estate, mutual funds, gold. So do your research and invest wisely. Now I will talk about some things which you should not do while investing in stock market. The number one thing which you should not do while investing in stock market is avoiding panic selling. If the market is going down and the value of your shares are going down, don't panic and sell the shares at a loss. In fact, consider this as an opportunity to buy more stocks at cheaper price and hold on to the old ones as well as the new stocks for a long period of time till the shares go up and you are in green. So the second thing which you should avoid doing while trading in stocks is avoid reading and believing rumors about a stock going up or down. There's no one in this world, no organization, no advisory firm, there's no individual who can tell whether the stock will go up or down. It's all demand and supply. So please don't believe someone who gives you a tip that this particular stock is gonna crash or gonna go up. However, with careful research, you can increase your accuracy of judging about the stock performance. So do your research, and if you are not having the time to research, search a genuine advisory who are well established, genuine, and do proper research of the market. Now I will talk about the platforms I use to buy and sell shares. Got into investing in stock markets 1.5 years ago, and the first platform I used was Zerodha. I loved its UI and simplicity. Also, it offered zero commission trading. So after a few months of research, the shares I bought were TCS, which is Tata Consultancy Services, which is currently at 23.87% profit. I will not disclose the amount I have invested for personal reasons, but this share at its peak was at 30% profit. Recently, I've started using HDFC Securities and I'm loving its UI as well. However, they do charge some commission per trade, which is a bummer, but as I want to use more platforms to trade shares, I'm fine with it. Guys, I hope you found this video informative as well as entertaining. Again, this is not a financial advice. Do your own research before investing in stock market and bear in mind that it can go up or down. Also invest only the money you don't need for at least 5 years. Thank you for watching the video. Please like, subscribe, comment down below. If you think something was missing in this video, I will cover that in another video for sure. Bye.